Welcome back to Mitchell Markets, where I break down trading strategies that actually make sense. Have you ever noticed how price always seems to pull back to certain levels before continuing the trend? That's not random, that's Fibonacci retracement. In this video, I'm going to be showing you what Fibonacci levels really are, how they work, and how I personally use them to find and enter positions into the market. Fibonacci retracement comes from a simple pattern found everywhere in nature called Fibonacci sequence. 1, 1, 2, 2, 3, 5, 8. Each number is the sum of two befores. When you divide those numbers by each other, you get ratios that appear in shells, storms, plants, and in market movements. The main Fibonacci ratios traders watch, or I watch in particular, is 0.236, 0.382, 0.5, 0.618, and one of my favorites, the 786 retracement zone. Of course, you have the 0 or 1, but we'll get more into that in a moment because you may wonder why there is 0 at the top and 1 at the bottom, or vice versa. And we'll get into that, and for me and my particular strategies, it doesn't matter. Basically, these ratios are just measuring how far a price will pull back before it continues its trend, or resistance levels and support levels in the market. So to draw the Fibonacci, you want to take the high of the time frame you're looking at and the low of the time frame that you're looking at, with the 0 and the 1, or the 1 and the 0. If you have the 0 at the bottom, that is usually for price targets, which would be Fibonacci extensions, which you'll see in my particular strategy. It doesn't really matter if you have 1 or 0 at the top because it is all the same thing. For example, 236 retracement drawn one way is the exact same as a 786 drawn the other way. Just like a 618 is a 382. And that's because I use Fibonacci almost strictly for entries and not for take profits. I'm not trying to predict how far price will go. I'm using it to mark reaction zones and areas where the market tends to stall, reject, or reverse. So whether you start from the top or the bottom, the key is consistency. Draw it the same way every time, so your levels match the structure of your trading. Now here's how I personally break down my Fibonacci levels into clear trading zones. I use 3 main zones: bear, neutral, and bull, and they help me read structure instantly. Bear zone, 0.236 to 0.382. This area acts like resistance during a retracement in a downtrend. When price rallies up into this zone, I'm watching for projection wicks, bearish candles, or a break back below my EMAs. If that happens, it tells me momentum is turning down, and that can be a possible short entry if other confirmations line up. Neutral zone, 382 to 0.5. I kind of call this the decision zone. The market often slows down here. Buyers and sellers can be balanced. Price can consolidate quite a bit. I usually stay patient in this area and wait for structure to confirm a direction before I start making a move. Finally, the bull zone, the 618 and 786. This is a deep retracement zone where price often finds major support and reverses higher. If volume increases or strong bullish candles form here, that can signal a strong bullish setup or the start of a new swing. The real power of Fibonacci comes when it lines up with other confluences like EMAs, volume spikes, or previous highs and lows. When 2 or 3 signals overlap in the same zone, that's where the high probability setups are and when I like to enter. So that's essentially Fibonacci retracement explained simply and used the correct way. It's not about predicting the future, it's about reading structure and reacting to it. And now we're going to jump into this real world example on Amazon of a 1-year Fibonacci drawn up. So one of my favorite zones is 786. Look at this massive support on the 786, and then what I would call a 786 crossover, which is very bullish for me, which is when it dips below the 786, but volume starts to spike and a lot of positions are added, causing us to reclaim 786 in a bullish setup. So this is my largest bull zone and where I'm looking for entries long term on sound companies. My neutral zone, you need a bit more confluence before you're entering into a position, because when you start getting into the neutral zone, it can kind of go either way. You're starting to hit some resistance on the 382, but still having support on the 0.5. So this would be neutral zone here, where I could almost justify entering in either direction with the right confluences behind my trade. The 618 to 0.5 is often considered the golden zone, but in my real world experience with trading off of Fibonacci zones for long-term investments, I find the 618 does react more often, but the 786 is far more powerful. Just like when you're looking at EMAs on a higher time frame, the EMAs 100 and 200 are always going to be more powerful than the 50s and 20s. So the 618 to 0.5 range is still a bullish sentiment for me, but it is not as sane, it is not as powerful as the 786 and does not have the same strength for rewards. But I will. The 382 to 236 is a bit more of a bearish zone for me. This is often where I'll see price hit resistance, or in a downtrend, if it is breaking off of all-time highs, the 236 is a support that is not very strong and tends to fail often. So this would be my bear zone. This is where you can find some very good short-term shorting setups. If we take a look over here, this is just a perfect example. Look how quickly price breaks down through this 236 zone. And as you can see, you get more and more resistance as we continue breaking further, just to show the strength of each zone and whether it's a bit bearish or a bit bullish or even neutral. So this 236 zone completely breaks down. This 382 zone, you can see some support and some resistance gathering here. This 0.5, you can see some support and almost a reclaim even, which looks almost like a bull trap. And then on this 618, you can see a lot of support on this 618, a lot of support on this 618, and almost tries to change pressure, and then it breaks down below the 200 EMA, breaking support of the 0.5 and breaking support of the 618, and then we get to the 786 and look at that resistance. Some break belows, break above, break below, break above, and continue, reclaim the 618 golden zone and continue on from there into new highs, or you could almost call this a double top. And actually, looking at this chart, I can almost see a cup and handle pattern forming on this yearly chart. Might have to be something to look into. But I'm already in Amazon, anyways. I digress. So you really see the key levels and the magnitude that they have into the market, and you can also see, look, in these bull zones, easily breaks through this bullish 618, this neutral to bullish zone of the 0.5, breaks through easily, and then has some struggle breaking through this neutral to bearish zone on this 382. Look at this struggle here in the price action. Finally gets through and is able to break through this bearish zone. To get through two levels here was less than a month long, and to get through these two levels here was roughly 3 months long. But breaking the resistance zone of the 236 is a very big testament to getting into all-time highs. So hopefully guys, this helped explain how I use Fibonacci levels and how you can use Fibonacci levels as well, and how vital it is in looking for long positions and using it for Confluence in the market for trading. And you can use the Fibonacci retracements. I use this all the time on days, weeklies, and longs, but the strategy is similar, but the Confluence changes. And again, 0, 236, 382.5, 618, 786, and 1. These can all be flipped around. It doesn't matter. I can draw this the complete opposite way. But for me, since I am not using this for price targeting, I do not need to draw it a certain way. This is the exact same, other than I have wrote bull, neutral, bear. But to get rid of that, and the 786 is interchangeable with a 236, 386 is interchangeable with the 618, and the 0.5 is just the mid price, with 1 now being all-time high. So thank you guys for tuning in to this quick, easy, useful way to use Fibonacci lines in your trading. And make sure to comment if you have any questions, subscribe, and I'll see you next time at Mitchell Markets. And I will even do some live trades using the Fibonacci zones, as well as I've already shown in other videos using Fibonacci zones on Confluence, like my ASML and UNH positions. Thank you guys for watching, and I'll see you next time.